Can't get enough of Bernal here on France 24, it appears. Let's turn, though, to some business news now. Stephen Carl is with us in studio. And Stephen, looking again at the latest in the bid to save TikTok from being banned in the United States.
More details emerging of that planned deal with the software giant Oracle. According to various reports today, the plan would put TikTok's global business into a new standalone company, with its current Chinese owners ByteDance remaining as a majority shareholder and Oracle as a minority one. That would mean that the American company would end up with a stake in the whole of the video app and not just its US operations. Treasury Secretary Stephen Mnuchin says ByteDance has committed to making TikTok Global a US headquartered company. This in an effort to put distance between the app and its Chinese owners. President Trump has set a deadline of this Sunday for the sale of TikTok's US operations or risk having the app banned.
Time is ticking. And meanwhile, Stephen, another dispute between the US and China has fallen foul of the World Trade Organization.
The WTO says that Washington broke global trade rules in imposing tariffs on $200 billion worth of Chinese imports. The organisation says the US imposed levies that were too high and unjustified. In response, the US Trade Representative said the decision shows the inadequacies of the WTO. Catherine Viette has the story.
The World Trade Organization again coming under criticism from the Trump administration after it ruled that some $200 billion in tariffs on Chinese goods imposed by Washington in 2018 were illegal. The decision angering U.S. President Donald Trump.
Well, then we'll have to do something about the WTO because they've let China get away with murder. Well, we'll take a look at that. But I'm not a big fan of the WTO, that I can tell you right now. Maybe they did us a big favor.
China brought the case to the WTO in 2018 as both countries were engaging in a tit-for-tat trade war. The U.S. argued the tariffs were a necessary response to the Chinese government's practice of technology theft and state aid, an argument the WTO found lacking, saying the U.S. hadn't proved its case. The Chinese government said it welcomed the decision, calling it fair and objective, and hoped the U.S. would fully respect the findings. Even if the ruling vindicates Beijing, it's unlikely to have much practical impact. That's because Washington has effectively gutted the WTO's appellate court after blocking appointments needed for new judges, leaving the appeals body without the quorum necessary to hear cases. The Trump administration could use the ruling to make an argument for leaving the trade body, as U.S. officials complain it's out of touch with the global economy.
Okay, in other technology news, Facebook could be facing new scrutiny in the US.
The Wall Street Journal is reporting that the Federal Trade Commission could bring an antitrust case against Facebook by the end of this year. The report says a final decision on legal action hasn't yet been made, but the FTC, which is the competition regulator in the US, has spent more than a year investigating whether Facebook used its dominant position in social media to stifle competition. Facebook is still making its case to the Commission. A previous FTC ruling on privacy practices at the social network saw it pay a record $5 billion in fines. Let's take a look at what's happening on the markets next. A mixed picture on the European markets at the open today. Retail stocks among the gainers in Europe. Among them, the Spanish clothing giant Inditex, owners of Zara. Their shares up over 3% after their latest results. In Asia today, the Nikkei in Tokyo held on to some earlier gains, but there were falls elsewhere across the Asian markets. Shanghai, Hong Kong and Seoul all in the red. Investors looking ahead to what the US Federal Reserve will decide later at its meetings. We're not expecting a change in interest rates, but we will get some insight into how America's central bank is feeling about the state of the world's largest economy.
Okay, meanwhile, going to live concerts currently off the agenda because of the COVID-19 pandemic, but one music streaming service is investing in virtual gigs.
Spotify has signed a deal with the ticketing site Songkick to promote live streaming performances. Under the deal, Spotify will show virtual gigs listed on artists' pages on Spotify. Unlike its rival Amazon, it won't be streaming the shows themselves, though. With most tours postponed well into 2021, the music industry has been looking for a replacement for its traditional cash cow. Streaming shows have soared in popularity during lockdown measures. The K-pop group BTS making almost $20 million from one single gig last June, proving there is money to be made. But you have to mosh in your front room.
It's pretty impressive, and you have to mosh alone. This is the problem. You can't even invite all your
Mind the
friends
furniture.
on. Yeah, it's better than nothing, but it's still nowhere near the same. Stephen, Carol, thanks a lot for that business update.